Every month, Dorothy from Nebraska receives her Social Security check of $1,847. But here's what might surprise you: after paying federal taxes on those benefits, she only keeps about $1,650 of what she earned through decades of hard work. That extra $197 going to Uncle Sam each month adds up to over $2,300 a year that Dorothy can't spend on groceries, medications, or visits with her grandchildren. But what if I told you that Dorothy, and millions of Americans just like her, might soon keep every single penny of their Social Security benefits? If you're someone who depends on Social Security or will depend on it in the future, make sure to like this video and subscribe to The Golden Money, because what I'm about to share could put thousands of dollars back in your pocket every single year. The wheels of change are turning in Washington, and for once, they might be turning in favor of America's seniors. Right now, as we speak, there are multiple bills sitting in Congress that could completely eliminate federal taxes on Social Security benefits. We're not talking about small adjustments or minor tweaks to the tax code. We're talking about a complete transformation that could affect over 40 million Americans who currently pay taxes on their Social Security income. Let me paint you a clearer picture of what's happening right now. Currently, if you're single and your total income including Social Security exceeds $25,000, or if you're married filing jointly and your combined income exceeds $32,000, you might owe federal taxes on up to 85% of your Social Security benefits. Think about that for a moment. You worked for decades, paid into the Social Security system with every paycheck, and now the government wants to tax you again when you receive those benefits back. It's like being charged twice for the same meal. Republican Representative Thomas Massie has introduced the Senior Citizens Tax Elimination Act to end taxation of Social Security benefits. But he's not alone in this fight. There's also the You Earned It, You Keep It Act sponsored by Minnesota Representative Angie Craig, which would eliminate federal taxes on Social Security income beginning in 2025. What makes this even more remarkable is that this isn't just a Republican or Democratic issue anymore. We're seeing bipartisan support for ending what many consider to be unfair double taxation. Now, let me tell you about Robert and Margaret from Ohio. They're both 68 years old, and together they receive about $3,200 per month in Social Security benefits. Robert worked as a machinist for 42 years, while Margaret spent 38 years as a school secretary. With their combined Social Security income and a small pension that Robert receives, they find themselves paying federal taxes on about 85% of their Social Security benefits. That means they're sending roughly $3,800 back to the federal government every year in taxes on money they already paid taxes on when they earned it decades ago. Under the proposed legislation, Robert and Margaret would keep that entire $3,800, which could cover their entire yearly prescription drug costs or allow them to visit their children and grandchildren more often. The timing of these legislative efforts isn't coincidental. President Trump vowed to eliminate taxes on Social Security income during his campaign for the 2024 election, and since his inauguration has repeatedly promised to see the pledge through. This campaign promise is now being transformed into concrete legislative action, and the momentum is building in Congress. But here's where things get really interesting, and this is the part that most people don't understand about how these changes could actually work. There's also a complementary approach being considered. The bill passed by the House would raise the standard deduction by up to $4,000 for people aged 65 and over, starting in 2025 through 2028. While this wouldn't directly eliminate Social Security taxes, it would significantly reduce the overall tax burden for many seniors, potentially achieving similar results through a different mechanism. Let me explain why this matters using a real-world example. Consider Janet, a 72-year-old widow from Arizona who receives $2,100 per month in Social Security benefits. She also has a small IRA from which she withdraws $8,000 annually to help with living expenses. Under current law, Janet pays federal taxes on a portion of her Social Security benefits because her total income pushes her above the threshold. If the Social Security tax elimination passes, Janet keeps all of her benefits tax-free. If instead the enhanced standard deduction for seniors passes, Janet might achieve the same result because her overall taxable income would be reduced by the additional $4,000 deduction. Either way, Janet wins, but the path to get there might be different. the financial impact of these proposed changes cannot be overstated. Eliminating income tax on Social Security benefits could increase the federal deficit by up to $1.5 trillion. That's a massive number, but it represents money that would stay in the pockets of American seniors rather than going to the federal treasury. For context, that $1.5 trillion spread over 10 years would average about $150 billion per year, which would go directly to the people who need it most: retirees living on fixed incomes. Now, here's something that many people don't realize about Social Security taxation. It's a relatively recent development in our nation's history. Social Security benefits weren't taxed at all until 1984, when Congress first introduced taxation on benefits for higher income recipients. The tax was initially designed to affect only the wealthiest retirees, but because the income thresholds were never adjusted for inflation, more and more middle-class retirees have found themselves subject to these taxes over the decades. What was once a tax on the wealthy has become a burden on ordinary working families who saved and planned for retirement. The human stories behind these statistics are what really matter. Take William from Texas, who spent 35 years as a truck driver. He receives $1,950 per month in Social Security benefits, and because he has a small amount of interest income from his savings account, he ends up paying taxes on about half of his Social Security benefits. That amounts to roughly $1,800 per year in federal taxes. For William, that $1,800 represents almost 2 months of grocery bills or the cost of maintaining his pickup truck for an entire year. Under the proposed legislation, William would keep that money in his pocket where it belongs. Or consider the situation of Anna, an 83-year-old former teacher from Michigan. She receives $2,400 per month in Social Security benefits and has a small teacher's pension that provides an additional $800 per month. Because her combined income exceeds the threshold, Anna pays federal taxes on 85% of her Social Security benefits, which costs her about $4,200 per year. At 83 years old, Anna shouldn't have to worry about complex tax calculations on benefits she earned through a lifetime of educating children. The proposed legislation would eliminate that worry and that expense entirely. The momentum behind these bills is building, but the legislative process takes time. Senators Marshall and Blackburn have introduced a bill that aims to eliminate the double taxation of Social Security benefits, and if enacted, millions of retirees could be exempted from federal taxes on their Social Security income. The fact that we're seeing action in both the House and Senate suggests that this issue has real political legs and could actually become law. What makes this particularly significant is the timing. We're in a unique political moment where eliminating Social Security taxes has support across party lines. Republicans see it as tax relief for hardworking Americans, while Democrats view it as protecting vulnerable seniors from unfair taxation. When both sides of the political aisle can find common ground, especially on an issue that affects tens of millions of voters, the chances of success increase dramatically. But here's the most important part that I want you to understand: if these bills become law, the change wouldn't just be symbolic. We're talking about real money going back into the pockets of real people who have earned it through decades of hard work. For a typical couple receiving $3,000 per month in combined Social Security benefits, eliminating the federal tax could mean keeping an additional $3,000 to $5,000 per year. That's not pocket change. That's life-changing money for people living on fixed incomes. The beauty of this legislation is its simplicity. Unlike complex tax reforms that require teams of accountants to understand, eliminating Social Security taxes is straightforward. You receive your Social Security benefits, and you keep every penny without worrying about federal income taxes. No more complicated worksheets, no more wondering whether you'll owe taxes at the end of the year, and no more sending part of your hard-earned benefits back to Washington. As we watch these bills move through Congress, it's important to stay informed and engaged. The legislative process can be slow, but the momentum is building, and the support is growing. Whether it's the Senior Citizens Tax Elimination Act, the You Earned It, You Keep It Act, or another version of this legislation, the goal remains the same: ensuring that Americans who have paid into the Social Security system throughout their working lives can keep their full benefits when they retire. The next few months will be crucial in determining whether this legislation becomes reality. But one thing is certain: millions of Americans are watching, waiting, and hoping that Congress will finally eliminate what many consider to be an unfair double tax on Social Security benefits. For Dorothy in Nebraska, Robert and Margaret in Ohio, Janet in Arizona, William in Texas, and Anna in Michigan. This legislation could mean the difference between struggling to make ends meet and enjoying the retirement they've earned and deserve.